Okay, you got this far, so you're interested in getting 25 extra points, or up to that amount. I'm going to take you through the first couple, if you pay attention in this video, okay? All I want you to do is enter these in a general journal fashion. It's a little bit different than the T accounts that we looked at before. If you've had accounting, it'll look familiar to you. All right, let's take a look at our general journal. We'll just click on that. For our entries, this is the assignment. We've got 17 different entries. First, take note of the actual explanation is all costs are expensed fully unless otherwise specified. All sales will be considered undeposited asset account. Okay? So if we make a sale, if we sell anything, the output that we sell actually, we won't deposit that till later on in the assignment, just to give you a little bit of a hint. That's all there is to it. Now, let's go back to the assignment. We're going to go find our general journal. Now, typically we put a date here, and then we'd enter the account and the account type. Okay? What account type I want you to actually tell me. Is it an asset account, liability account? Is it a equity account? Is it a revenue or an expense account? 5 different accounts that you get to pick. Okay? And then specify what account it's going to be. There's going to be some variability. Your business is going to be set up a little bit different than somebody else's. But the generalities should come through in this whole thing. And I'll do the first one for you and give you some hints on the second one. So, let's go back to the actual entries. You, as the owner, purchased 3 used pickups at the price of $30,000. That's for 3 pickups. For the company use. Paid cash. Okay? And what we mean by that is that we either paid cash or it came out of a checking account. So, first thing, and this is one way to think about it, if this is a little bit difficult for you, if it involves the checking account, which most people base their business out of, whether they're using a debit card or an actual check, is they make that entry first. And if you get that right, that entry correct, then you have a pretty good chance of getting the next entry in the double entry format, getting it correct. Okay, so kind of make that stick in your mind, and I think that'll help you. Not all of these entries will deal with the cash account, but a fair number of them will. All right, here we go. So we bought 3 pickups. They averaged $10,000 a piece. Total cost was $30,000. We paid cash. The cash account, we're going to increase the cash. Are we going to increase the cash account? No, we're not going to. We're going to decrease the cash account. We're going to credit the cash account by $30,000. So let's go back to our general journal. You don't have to put the date there. And we're going to go cash account. And I'm going to specify it's an asset account, correct? I'm going to credit that by $30,000. Now the offsetting entry, or the debit side of that thing, we're going to debit the vehicle account, which is an asset account. Right on. Okay, so we've got a vehicle account right here, and that's an asset account as well, and we'll debit that for $30,000. All right, number 1's in the books. There you go. That's all there is to it. Now drop down just so that it's easier for me to correct, and I've got a space there, and just put all your entries right here on this particular spreadsheet. You got to remember, you're going to have to save this first. You have to go down up here and go make a copy for yourself and name it. You can just name it General Journal, okay? And then you can start. You can actually make these changes or put these entries into your general journal of your own. I want you to save that and put it in the subfolder under AgEcon 2010 for this week. All right? That's all there is to it. All right, number 2. Now, here we have it. You have 25 ranch horses shot at the rate of $105 per head. Your farrier bills you on the count. Okay? Now, let's break this down a little bit. Does it affect your cash account? No. We didn't pay him anything. We didn't pay him a check. He didn't take a credit card. He didn't do anything like that. But he's going to bill you. So that would actually be an accounts payable. So that would be accounts payable to the farrier. Would be a liability account. The other side of that would be that's shoeing expenses. It looks like you must use this account probably quite often or enough so that it would affect the income statement on the expense side of things. So we would probably designate one account for it called shoeing expenses. Okay, so there we go. And it's going to increase that expense account. So let's go back to our general journal. And we're going to put the accounts payable first. Accounts payable. And that's a liability account. And we're going to increase it or decrease it. We're going to increase it, right, for the farrier. Accounts payable, I might even call it accounts payable farrier. We're going to increase that. Would that be a debit or a credit? Go back to our T account and our cheat sheet. It's the opposite of an asset account, a liability account, as far as the debits and credits goes. So in order to increase a liability account, we're going to have to credit it. All right? I'm not going to give you the exact amount, but you're going to put that number right there. All right? So the next entry, the offsetting entry, is going to be shoeing expense. And that's an expense account. And we're going to debit. We're also going to increase that expense account. And on expense accounts, debiting is increasing. So there you go. Just keep going until you get to number 17. If you have any questions between now and Sunday, I'm not going to let you turn it in after that because it's bonus. That's all there is to it. This stuff's not too hard if you just pay a little bit of attention. Got any questions? Let me know.